General Studies 3. Topic: Indian Economy, Growth and Development. Banking Reforms 1. Introduction. To sustain the high growth rate India has achieved, the country should carry out banking sector reforms, continue with fiscal consolidation, simplify and streamline GST, and renew impetus on reforms, the International Monetary Fund said. IMF also said India must address the ongoing crisis in its banking sector to support investment and inclusive growth agenda. Historically, India's banking sector reforms, especially in the 199-0, focus on enhancing competition, strengthening governance and regulation. Future reforms should build upon these areas and draw lessons from past experiences. To present status, India's banking system is characterized by a high share of public sector banks, PSBs, accounting for over 70% of total assets. We see a steady deterioration of the banking sector in successive quarters. There has been policy inaction on reforming the governance of the banking system to distance it from politics. Since the RBI launched the Asset Quality Review (AQR) in 2015, Indian banks have had to progressively reveal the true extent of their NPAs. The gross non-performing asset (GNPA) of the scheduled commercial banks (SCBs) has deteriorated from 10.4% in September 2017 to 11.6% in March 2018. The deterioration with regards to public sector banks is even sharper, from 13.7% to 15.6%. Rising NPAs have also put a strain on the health of the PSBs, reflected in their declining return on assets (ROA) and return on equity ratios. The decline in banks' profits is largely due to higher growth in risk provisions, loan write-offs, and decline in net interest income. The stresses on the banking sector have translated into a slowdown in industrial credit. They also limit banks' ability to meet international capital requirements. Banks are witnessing the surge in willful defaults, or refusal of repayment obligations by borrowers. 3. Concerns/challenges. Deteriorating profitability and asset quality pose elevated risks to banking sector stability. RBI has warned of further worsening of NPA situation. Issues like Punjab National Bank fraud raise the concern for banking sector reform in India. With growing internet and mobile banking, cybercrime is becoming a greater threat. Rising willful defaults in PSBs hurt investor confidence. Political interference while granting loans. More exposure to corporate loans by PSBs while private banks maintain a balance between corporate and retail sector loans. India's banks lag behind global counterparts in terms of financial depth for the size of banks. India also has low levels of private credit to GDP and credit to deposit ratio relative to other emerging economies. With oil prices rising, it is difficult for controlling the fiscal deficit, current account deficit, and inflation. For way forward, need to build capacity in the PSBs to evaluate lendable projects. Urgent need for freeing PSBs from political interference. Reducing the government equity below 51%, and attracting some strategic investors. It will not only reduce the pressure on government for recapitalization, it will also set the stage for a more commercial orientation for public sector banks. Comprehensive approach to improve the capacity, risk management, and governance of the PSBs. Revive bank credit and enhance the efficiency of credit provision, accelerate the cleanup of bank and corporate balance sheets. Willful default must be recognized early and followed by quick action. Ensure balanced exposure to retail and corporate sector lending. Amalgamate banks into bigger entities by mergers and acquisitions and ensure capital adequacy as per the Basel norms. Developing corporate bond markets to relieve pressure from banks as lending sources. Banks need to do forensic audit for ascertaining the end use of funds. To build a robust banking system, recapitalization will have to be complemented by lower entry barriers, improved financial supervision, and efficient debt recovery mechanisms. Decisive and urgent actions are necessary for not merely ensuring the stability of the banking system, but also to create conditions for sustained accelerated growth,